Good morning, students. Welcome back to the 20th session of Advanced Financial Management. This is Padmavati Indargi, Assistant Professor of Management from GFJC Devanahalli. Today in this session I am going to cover some more problems on weighted average cost of capital. The session outcome is to make you able to calculate weighted average cost of capital. In previous session too, we have seen problems based on weighted average cost of capital. So today we'll see some more problems on WACC. Problem number 1. A company has on its books the following amounts and specified cost of each type of capital. So type of capital is there, book value is there, means book value of this source of capital they have given, and also market value is given, and the specific cost attached to this type of capital, it is also mentioned here. We need to determine the weighted average cost of capital using book value weights and market value weights. Since market value and book value weights are given, we need to calculate the weighted average cost of capital. So we'll start with the solution. First we'll calculate weighted average cost of capital based on book value weights. So amount is given in the first column, that is 4 lakh, 1 lakh, 6 lakh, 2 lakh. 6 lakh and 2 lakh, and specific cost they have given in the problem itself 5, 8, 15 and 13, that we need to mention here in the fourth column. This proportion we need to calculate. How to calculate this? 4 lakh divided by 13 lakh, 30.77. 1 lakh divided by 13 lakh is 7.69, and 6 lakh divided by 13 lakh is 46.15, and 2 lakh divided by 13 lakh is 15.39. We need to calculate the proportion taking each source capital divided by total capital. So we need to multiply this proportion with the specific cost, that is 30.77, 154, 7.69, 8 I have rounded here, 46.15 into 15 is 692, and 15.39 into 13 is 200. So the product of proportion and specific cost is 1108. So weighted average cost of capital formula is summation of XW divided by summation W. 1108 divided by 100 is 11.08%. This is based on book value weights. Now we'll see based on market value weights. The specific cost is same for market value weights also. So amount is given in the problem itself. The debt is 3,80,000, preference is 1,10,000, equity is 9 lakh, and retained earnings is 3 lakh. That we need to mention here. In the third column, specific cost we need to mention, and in fourth column we need to mention the specific cost, and third column we need to calculate the proportion, that is debt divided by total capital, preference capital divided by total capital. So 3,80,000 divided by 16,90,000, 1,10,000 divided by 16,90,000, 3,80,000 divided by 16,90,000 is 22.5, 1,10,000 divided by 16,90,000 is 6.5, 9 lakh divided by 16,90,000 is 53.3, and 3 lakh divided by 16,90,000 is 17.7. It comes to 100. So now in the fifth column we need to take the product of X into W, that is proportion to specific cost. 22.5 into 5 is 113, 6.5 into 8 is 52, 53.3 is into 15 is 799, 17.7 into 13 is 230. The total is 1194. So weighted average cost of capital is summation XW divided by summation W. 1194 divided by 100 is 11.94%. Problem number 2. MN Limited has the following capital structure. Equity share capital 20,000 shares of 40 lakh, 10% preference share capital of 10 lakh, 14% debentures of 30 lakh. So total capital is 80 lakh. The share of the company sells for 20. It is expected that the company will pay next year a dividend of ₹2 per share, which will grow at 7% forever. Assume 50% tax rate. Compute the weighted average cost of capital based on the existing capital structure. Next question connected to the problem number 2. Compute the new weighted average cost of capital. If the company raises an additional of 20 lakh debt by using 15% debenture, this would increase the expected dividend to ₹3 and leaves the growth rate unchanged, but the price of share will fall to 15 per share. So it is first we need to calculate existing capital structure, that is ordinary shares, preference shares and debentures, that is after tax cost. After tax cost, how we need to calculate? First we'll take the weights. How to assign the weights? That is 40 lakh divided by 80 lakh, 10 lakh divided by 80 lakh and 30 lakh divided by 80 lakh. These are the weights. After tax cost is 10% preference, that is 0.10. 14% debenture, after tax we need to take 14% debenture, the tax rate is 50%. So 14% into 50% is 0.07%, that is 7%. So weights we have calculated, and after tax how to calculate the cost of equity share is, the formula is KE is equal to dividend 1 divided by PO plus G, that is 2 per share they are giving the dividend as given in the problem. Dividend of rupees 2 per share, which will grow at 7% forever. The share of the company sells for 20. So dividend is 2, share of the company sells for 20, that is 20 rupees we need to take, plus growth rate is 7%, that is 0.07. So the cost of equity is 0.17. That we need to mention here. 10% dividend means 0.10 and 14% debenture after tax, 50% tax. So we need to take 0.07. Whenever we are quoting the debenture cost, we need to take after tax. So the product of 0.17 into 0.5 is 0.0850, 0.1 into 0.125 0.0125, and 0.07 into 0.37 is 0.0262. This is 12.37. Now we need to calculate based on problem number 2. Another question is how to calculate for new capital structure. As these are the amounts which are available in the which have already been procured, the company is procuring additional debt capital of 20 lakh at 15%. So by taking the existing data and adding this additional capital, we need to calculate again the new weighted average cost of capital. So after tax cost we need to calculate, this calculation is here, but 10% preference again 0.10, 14% debenture, after taking the tax rate it becomes 0.07, 15% debenture it becomes 0.075, that is 15% into 1 minus T, that is 0.075. Weights already I said 40 lakh divided by, this comes around now 50, 80, 1 crore, 40 lakhs divided by 1 crore 0.40, 10 lakh divided by 1 crore 0.1, 30 lakh divided by 1 crore is 0.3, 20 lakh divided by 1 crore is 0.20. Then how to calculate the cost of equity? So in the problem they have given this would increase the expected dividend to rupees 3. First it was rupees 2, and now because of raising the additional debt capital of 20 lakh, the dividend expected is rupees 3. Leave the growth rate unchanged, means 7% is only the growth rate, but the price of the share will fall to rupees 15. That in previous it was 20, now the price of the share fallen to 15. So we need to calculate the cost of equity, that is 3 divided by 15 plus 0.07. 3 divided by 15, that is 0.20 plus 0.07 comes around 0.27. That is 3 divided by 15 plus 0.07 is 0.20 plus 0.07 is 0.27. So this 0.27 we need to write here, and then we need to take the product of 0.27 into 0.4, 0.10 into 0.10, 0.07 into 0.30, and 0.75 into 0.20 is 0.015, that is 15.4%. Next, problem number 3. From the following capital structure of a company, calculate the overall cost of capital. Equity share capital of rupees 10 per share is 45,000. Book value, market value is given. Retained earnings, book value is given and market value is nil. Preference share 10,000 and 10,000. Debentures 30,000 and 30,000. The after tax cost of different source of finance is as follows. Equity share capital 14%. Retained earnings 13%. Preference share capital 10% and debenture 5%. It's after tax cost only given. We have to take the same 14, 13, 10 and 5. Proportion, how to calculate? Proportion is 45,000 divided by 1 lakh. This is 40, 55, 60, 1 lakh. This comes on to 1 lakh. So 45,000 divided by 1 lakh, 15,000 divided by 1 lakh, 10,000 divided by 1 lakh, and 30,000 divided by 1 lakh. So we need to take the proportion, and after tax cost is already given in the problem 14, 13, 10 and 5. We need to take the product 45 into 14, 15 into 13, 0.13, 10 into 10%, that is 0.1, 30 into 0.05, that is 1.5, 1, 1.95 and 6.3. So the weighted average cost of capital is 10.70%. Next, market value weights are given. So proportion we need to calculate. How to calculate the proportion? 90 lakh divided by total capital, that is 1,30,000. So 90 lakh divided by 1,30,000. Here retained earnings is not given, leave it off. 10 lakh divided by 1,30,000 and 30 lakh divided by 1,30,000. This proportion we need to write here, and after tax cost is already given, which remains unchanged. So we need to take the product 69 into 0.14, 7.6 into 0.10, 23.5% means 0.05. So 9.66, 0.76, 1.17. The weighted average cost of capital is 11.59%. So this is about some more problems on weighted average cost of capital. Thank you.